Thank you for inviting Shanda and I out here to be with you. It's great. I told the pre-planning committee anytime I have the opportunity to come talk about what we're doing in North Dakota, and specifically at the Bank of North Dakota, I get excited about that because we've got a lot of cool things that we're doing out in our state. And so I really need to start with my family. And once the PowerPoint gets going, I got a beautiful picture, but I do want to carry on with Michael's introduction and spend a little time bragging on my wife. She's not only part of Black Lake Ranch, which is award-winning for their regenerative practices and their soil health practices and their rotational grazing and their custom cover cropping and their winter grazing and their stacking enterprises, and the list goes on and on and on and on. Leopold Award winner. She's a part of that. She also owns her own business. She's a realtor. She is the Secretary of the Senate. She's hopefully future District 8 state senator. I keep trying to talk her into that. And she's mother of my 4 beautiful children. So I'm really happy to have her today, have her travel with me. She's an integral part of not only my story, but the Bank of North Dakota story, as well as the North Dakota story. Let me make sure this is clicking forward here. Do that. Yeah. Our family motto is embrace the chaos because we have 4 children, because she's involved with all that. I'm also CEO of a bank. I'm also full-time Uber for my children. We've got 2 in college. One's out in Boise who is kind of following in my footsteps, going to be a banker, getting his CPAs in his 4th year. I have one out in Cal Poly who is really kind of following in my wife's footsteps with the more adventurous, and he's getting a degree in entrepreneurship, and he's also on the rodeo team. He's steer wrestling out there. He's rodeoing on the beach, and he's having a great time. My daughter, who's 11, and hopefully you'll be able to see the picture here pretty quick, she's big into figure skating, on synchro figure skating teams. She's involved with everything. She just got into junior high, and so Shanda and I are both pretty much full-time Ubering her around to all of her various events. Her figure skating team actually has came out to Boston here before for national championships, and so there's a tie there. And then my youngest son, Kaysen, is 9, and he's my hunter, my fisherman, my football player, my baseball player. So we have a lot going on out in North Dakota, especially with the Morgans and especially with Bank of North Dakota. As Michael mentioned, I have 25 years in the community banking industry. Worked for community banks all my career, anywhere from 500 million to a couple billion in asset size, pretty much all of that in North Dakota. I did a short stint in Dallas, Texas, right during the 08-09 financial crisis, so really learned a lot of what not to do down there. But my history and my passion is in community banking. There we go. Yeah, there's my family. That picture's on Black Lake Ranch. It's a pretty beautiful place out there. If you ever get a chance to come visit, come in June, July, or August. Don't come in January or February. It gets a little rough out there. My passion is for community banking. My passion is for North Dakota. My passion is for the upper Midwest. My passion is for agriculture because that's just who I am and that's who we are, and that's really how we're wired. If we're going to talk Bank of North Dakota, we first have to talk the Industrial Commission, because they're incredibly important to allowing us to operate. I would argue they've been incredibly important to our survival for the last 106 years. There's a key part in there. So the Industrial Commission was set up at the same time we were back in 1919, and they were made up of the governor, the attorney general, and the ag commissioner. Now, why is that important? If I, as a CEO of the Bank of North Dakota, owned by the state, if I just reported to the governor, I would be subject to replacement every time the governor was reelected. So this gives my position as CEO of Bank of North Dakota a little bit of steadiness. And we exist, as a public bank, we exist in that gray area where we're publicly owned, and our governance model is the legislative group, the Industrial Commission, but our customers are private market. Our main partners are private markets. So we're straddling that gap. So the more steadiness you can bring in upper management of the bank that is straddling that gap here, Bank of North Dakota, it's just a better outcome. It helps improve the longevity because I have a little bit of protection from the politics and the elections, and the Bank of North Dakota has a little bit of protection from that because these are all three different elected positions, and they don't typically change all at the same time. Sometimes they do, and sometimes in our history they have, but they don't typically change all at the same time. And the Industrial Commission overall, not only is the board overseeing us, but they oversee many different agencies, so Department of Minerals and Department of Water, and they're essentially set up to regulate, like it says, utilities, industries, enterprises, so on and so forth. In those same founding documents, and I brought the founding documents, they're in one of the green books, and if you haven't got books yet back there, I brought the black book, which is a nice written history done on the Bank of North Dakota. There's really neat stories in there. The Breaking the Barrier is our annual report, and the other book that doesn't have a title on the cover, that's our actual founding documents, typewritten up. We copied them, put them in a binder, so please grab a book and use that for your reference. At the same time, the Industrial Commission was set up, Bank of North Dakota was set up, and in our founding documents, our original mission was set for us simply to promote North Dakota agriculture, commerce, and industry. That's our same mission today. That has not changed for 106 years because it's a really good mission and it's what we fulfill on. But it goes on to say in those founding documents, we are not to compete. And not only are we not to compete, we are to cooperate, we are to aid, we are to partner, we are to help and coordinate all parts of the financial services industry in North Dakota. So it is in our founding documents very, very clearly that one, we report to the Industrial Commission. Two, we are to promote North Dakota agriculture, commerce, and industry. And three, we are not to compete, instead we're to help. So that's really the setup and the basis of our 106-year history is right in our founding documents. Why did we start though? I like to say we really got started because of a bunch of angry farmers, and specifically a bunch of angry wheat farmers. Back then, wheat was the primary commodity of North Dakota. It was the largest industry, and the wheat farmers were getting very unfavorable terms out in Minneapolis on interest rates, very unfavorable terms from the shipping monopolies and the railroad monopolies and all that was going on there, so much so that they formed essentially a kind of a new political movement at the time and worked their way into state government and ultimately led to the formation of both the Industrial Commission and the Bank of North Dakota and the State Mill and Elevator. So that's the other state-owned for-profit business that we have in North Dakota that is really our partner as well, but is pretty unique as well. Here's our timeline. So from 1919 to today, and in the Black Book, there's these incredible stories, but you go back to the Depression, and there's these really interesting and cool stories about how farmers were getting foreclosed on, right? There were 200,000 farms foreclosed in the Midwest during the Great Depression. In North Dakota, Bank of North Dakota stepped in, bought those farms, rented them back to the original farm families for $1 until they could recover, and then when they recovered, the Bank of North Dakota sold it back to them at a price they could afford. It really saved the North Dakota farming industry at the time. At the same time, during the Depression, there were teachers getting paid in warrants rather than cash. And those warrant conversions required a 15% fee, and the teachers couldn't afford that. So Bank of North Dakota stepped in and converted those warrants to cash for those teachers and just ate the fee. So, and you fast forward through history, we did our first student loan in the 60s. You can fast forward through disasters. We've had floods, we've had fires. The agricultural industry in North Dakota has many disasters. It's currently going through its second disaster in 3 years. We've had the current federal shutdown, things like that. I say all that to say this. Part of our mission is promoting North Dakota agriculture, commerce, and industry. A big part of that is being there when North Dakota needs us. And that is a huge part of our history, being there for those disasters, coming up with special programs, coming up with things that help, things like that. Another part of our timeline that's really, really important is the fact that, and I'll go through these verticals, our verticals that we, are kind of our core verticals. And they play in here. But there's been a lot of special programs that we've worked with the legislature, the Industrial Commission, the Governor's Office, the Executive Branch. We've worked with the private market through our 91 community banks and credit unions in the state. We've served as that middleman that really has created a lot of custom solutions for the state that are either aligned with the state strategies or is something needed out there that our community banks and credit unions has said to us, hey, this is needed. We're the middleman, in other words, and that's kind of in this timeline, you can kind of see that. We started out with $2 million in capital. We are $10.6 billion in assets today. We have $1.2 billion in capital, so there's been tremendous growth. And we are still funded entirely, materially entirely, by state captive deposits. So just simply the average tax revenue base that comes in before it's spent, that average balance is what we use as our deposits. We leverage that into loans and securities and fulfill on our mission based on that model. We do not compete out into the North Dakota streets for deposits or customers in a material way. There's always a little bit of overlap here and there, but in a vastly material way, we don't ever compete. Not only is it important not to compete from our founding documents, but it's also important from a business sense. It makes no sense for us to compete. Either our community banks and credit unions have the deposit funds to lend, or we do. If we take it from them, it's just less for them to lend. And if they take it from us, it's just less for us to lend. So it doesn't make the pie any bigger. We can't exponentially put out more capital flow if we're just eating each other's deposits. So it makes no business sense as well for us to compete with our financial institution partners. Here's our governance framework. Here's how it's supposed to work. Up at the top, and I equate this to the private market because it's easier to understand, because the private market has governance framework models that really work. There's a reason private market, whether you're a company or a bank, that you have an independent board of directors. So you don't run into things like Enron and what happened back in the day. I mean, there are very valid reasons for these structures. We, in the brilliance of the people that have come prior to me at Bank of North Dakota in setting up this structure, I really thank them and consider them brilliant for having set it up this way. So the legislative group is essentially our shareholder group, quote unquote. Essentially, they appropriate and then they receive dividends from us. They also have input to us and with us. However, they are not part of the approval-making process for us. That's the Industrial Commission. However, we have the extra nuance that they can pass laws that affect us. So that's why I said this is the way it's supposed to work, and then I'll talk about how in reality it really does work. But in reality, or in structure, they're for appropriations and for dividends. The Industrial Commission is our oversight board. They provide oversight, which in banking is incredibly important for risk management, for liquidity management, for return, for marrying up what the shareholders want with what executive management says is needed out on the front line. So they are that board. So they help with strategy, they approve our strategy, they approve our direction. They're also part of credit decisioning. So if we get over $25 million in an aggregate credit decision, the governor, the attorney general, and the ag commissioner do decide on that credit. They're the final part of that decision tree, kind of like a normal legal board would. Now those three gentlemen, they're currently gentlemen, they don't have a lot of time, right? They're busy running a state. So they did, a few decades ago, develop the advisory board. And those are appointed by the governor, approved by the Industrial Commission, and that's the larger board that we have, about 14 industry experts, and we've got experts from the oil industry, from agriculture, construction, you name it. We've got really good leaders on that board. We've got the chair of the FHLB, we've got a Federal Reserve member on there as well. And so a really good advisory board who is also part of the decisioning tree process for us, the strategic planning. But they make recommendations to the Industrial, they're an extension of the Industrial Commission. They are not our legal board, the Industrial Commission is per our founding documents. And then of course you have executive management, which I lead, and I have kind of your typical executive management team, chief credit officer, chief operations officer, chief financial officer, chief talent management officer. We do have a division called Public Affairs, and I have a Chief Public Affairs Officer. That's pretty unique in banking, but it's really critical to us because in reality, this is in place. However, we get all kinds of overlap, and there's all types of politics in this, as you would expect. So we spend a lot of our time managing and having conversations with our legislators, with the Industrial Commission, with the governor, trying to work through, okay, based on the current problem, the current situation, what would the legislature like to see? What would the Industrial Commission like to see? What are our banks saying? And then again, we're that middleman that really pulls all that together and says, this would be the best path forward. Industrial Commission, we think this is the route we should go. It works pretty well. It really, really does. We are overseen by the North Dakota Department of Financial Institutions, Lisa Cruz, who I'm very close with. I have conversations with her all the time. She oversees and regulates all the banks and credit unions in the state. Typically, she's doing joint examinations with the FDIC and the OCC, because a lot of our banks and credit unions in the state are also not only state but federally regulated, and we're also audited by Eide Bailly for our audited financial statements. We are not technically required to follow federal law and federal regulation when it comes to banking. However, we really do. And we do for a couple reasons. One, a lot of them are just good best practices. They really are. Now, some of them are not. I'm not going to go there. I like to stay non-contentious and apolitical every chance I get. But most of them are just good, sound regulation for banking, right? Been in place for a long time. Plus, and additionally, keep in mind, our biggest strategic partnership is with 91 community banks and credit unions in the state. They are all federally regulated. So if they have to abide by it, and we're so closely tied with them, we really follow it by extension, by indirect extension. And again, it's just best practice to do so. It just makes good business sense. Here's our verticals. And I'm going to spend a little bit of time on this slide. And I'm going to start in the middle and work out. The middle left, participation lending, that's our largest core vertical. That is where we participant lend. So we've got a lead bank. They have a deal coming in. I've got an example I'll walk through. For some reason, they don't want to keep all their part of the deal. The risk profile might be slightly elevated, still bankable, but slightly elevated, more elevated than they want to keep. And so they might sell half of it to us. They might sell a quarter. They might sell 3/4. They might sell the whole thing. The rate might be something they don't like. It might be above their legal lending limit. It might be above their internal hold limit. Whatever strategic reason that bank or credit union has for wanting to sell all or part of that loan, we're really their first source of capital for that. That's our largest vertical. So we have $4.9 billion in commercial and ag loans on our balance sheet. Our average participation rate is 50%, which means that in partnership with those 91 community banks and credit unions, we're putting out $10 billion to the state of North Dakota in capital flow that I argue a good portion of that probably would not have been lent by a North Dakota community bank or credit union without us involved. So I like to think we have a big part of facilitating $10 billion worth of capital into the state. On the left, and I want to point out here too, I've got 3 market verticals that I make money on. And I like the 3 are participant lending, student lending, and Fintech, my new one on the right, is going to be at market rate, something I can make profitable. I have to have those 3 to make a profit so I can pay for my 3 that are not built to make money. So my first one, participant lending, is all at market rate. So that market rate, whatever established through competition by those lead financial institutions, that's all at market rate. That's my biggest vertical where we make money. The second one is student lending. You guys know this on a national level. Student lending has, it's been a mess. Let's just call it what it is, right? It's been a mess. So in the 60s, we started our first student loan. We've been kind of through those gyrations of the federal government was in, and then they're out, and then they're kind of back in, but not really, and then the private sector's in and not really. We've provided a lot of stability for North Dakota through all that volatility because we've provided student loans for North Dakota kids going to a university anywhere in the nation, or if someone is coming in to go to a North Dakota university or college. Those are the 2 avenues that we play in terms of student loans. That is all at market rates, and it's one of our other core verticals. We've got about $1 billion in student loans that we put out. The third one, Fintech, I'm going to hold and talk a little bit later when I get into our looking ahead strategies, because there's a lot of Fintech disruption going on in the banking industry. We are now becoming a part of that. That will be at market. That'll be something that makes money for our bank, but I'm going to hold that later on. Disasters. I mentioned earlier on the timeline, we've been there for every single disaster, and that's absolutely true. All of it is at below market rates. Typically, our disaster loan programs are anywhere from 1% to 2%, regardless where the market's at. And why? That's kind of where the legislature likes us to play. Because when we get into below market, there's a mix of whether we do it on our balance sheet or whether the legislature comes in with some additional appropriated dollars. And I'll get into some examples of that here shortly. But it is below market, but it's a huge part of our mission. Currently this year, we are currently on our 4th disaster program. We started the year with what we call the 2024 Ag Disaster Program. That's because a lot of our row crop farmers were going through incredible stress with compounded inflation, high sustained interest rates, and a huge drop in commodity prices. We did a relatively small program for them to get them through 1 year. We had 2 huge storms come through North Dakota. They call it, I swear the meteorologists are just making up new names for storms these days, because I had never heard of a derecho storm, and it's probably my own ignorance, but that's the first time I'd heard derecho, and then the most recent was like I can't pronounce, the Mesopotamianic storm. I swear they're just making it up. But we had these huge storms damaging grain storage and operations and businesses. So we've had storm damage, disaster relief programs. We came up because Governor Armstrong came in and he spent a lot of time. He was U.S. Congressman for many, many years. Given that knowledge from him, he wanted us to build the first of its kind furloughed federal employee paycheck protection program here in North Dakota. So we did that, 2% loans covering 90 days of pay periods, and the only thing we do is we take an assignment of the back pay from the federal government because the federal government put it in law that they would pay that back pay. That's our repayment source. We did that working with the Industrial Commission. That's all below market. Like I said, 2%. We don't charge any fees. All of these disaster programs, every single one of them, we roll out through our 91 community banks and credit unions. Everything goes through them. In fact, it's easy for me to say we would not be able to do them without our 91 banks and credit unions. We don't have the staff. We don't have the resources. So what it works is we will come up with the protocol and the program and the infrastructure working with them, but they will help us roll it out. They'll be the front line. They take the applications. They do a lot of the underwriting. So it's truly a symbiotic partnership between us and them, not just for our core vertical of participation lending, but also for disasters and other things. And then we have our legislative-based programs, that second from the right, or the second from the middle right. These are our off-balance sheet programs. This gets a little complex. On balance sheet, we've got our loans and participations with our community banks and FIs, our disaster loan programs, our student loans. Off balance sheet, we have these legislative programs that are specifically approved in law. I'll give you a good example. The legislature wants to build schools, and they want to help build schools with cheap interest rates. They stood up the School Construction Revolving Loan Fund. We manage that. We account for it in our audits, but it's not on our balance sheet. It's off our balance sheet, but it's an off-balance sheet commitment, right? But the legislature initially funded the program, I think, with $300 million, and its intent is to be a revolving loan fund. So what happens is we manage and we take the applications from school districts to build a school, and we approve them up to $300 million, but they're loans. So we book them, we set them up just like loans. They're at 2%. That school district pays them back. As they pay them back, that opens up room for future schools to be built at the 2%. And every session in our legislature meets on a biennium basis. Every session we go through, do you want to reapprove the revolving loan fund for school construction moving forward? And typically that's yes. We have it for school construction. We have it for infrastructure construction. So think sewer, water, for municipalities in our local districts. We have special ones set up for clean, sustainable energy research, researching the most recent natural gas, carbon sequestration, carbon capture, enhanced oil recovery, you name it. We've got 54 different legislative programs that we are managing. They're all off balance sheet. A lot of them are at 2%. They're all loan programs. They all revolve. And that's a big part of what we do as well. So those are our main verticals, and I'll finish up with Fintech here in just a little bit. This is a good slide that really shows, I think, being that middleman, being that cog, that middle cog in the wheel. On the right are our 91 banks and credit, and I can't say that enough. Without them, we don't get anything done. They are our main partnership, not only for facilitating disaster programs, but for sharing of information, sharing of not, they're our ears on the street. A lot of times we get called the Bismarck bubble because in Bismarck, you know, one thing might be true, but that might be true in Grand Forks, or out in Dickinson, or out in Ellendale, you know, in a lot of our small communities. So all of our community banks out there are our ears on the ground telling us what's going on. Also on that right gear, you could put not only our banks and credit unions, but our economic development agencies, our local municipalities, our nonprofits. We work a lot with them. Typically what we find ourselves in is there's some need that comes up. And a good example would be, I'll make sure and tell you all public information, and this is all public. We had a big company out of Belgium want to come into the state of North Dakota because they had a special way to process potatoes. Potatoes, there we go. And we were competing with Madison, Wisconsin. We were competing, or not with Wisconsin. We were competing with Wisconsin because Wisconsin and North Dakota both had the soil type that was specific to their breed of potato. And it was a high-producing potato, right? So we're competing with them. When we got involved and identified that need, we pulled in the Grand Forks City Council, we pulled in the Economic Development Agency, we pulled in legislative leadership, we pulled in the governor's office, the ag commissioner's office, we pulled in a local bank, and we quarterbacked that whole thing. And at the end of the day, we put a creative financial solution in front of that Belgium-based company, and we won against Wisconsin. We're getting a $550 million potato processing plant built in Grand Forks. We won, and they told us this because we got so creative. So our real magic sauce is pulling together all these partners and getting creative and working backwards from whatever need there is for North Dakota. And that need might emerge from the state government, but many times it emerges from one of our local community banks. They're the one that sourced this opportunity. So they came to us and said, we have this thing happening, help us out. And we're like, because our mission is to promote North Dakota agriculture, commerce, and industry, because they're a key partner of ours, we're always ready and willing to step up and help in those circumstances. And I could sit here and tell you about 25 examples of that just over the last year, but we need to move on. But that's really our magic sauce. That's really where we work the best. Here's a specific example of how we work on a specific deal. This is a typical market rate deal in our core vertical of participation lending. So a community bank out there or a credit union have $1 million deal, market rate 6.5%. They will underwrite it. They will go through their good decisioning. They'll go through their decision tree and determine, do we want to do this deal? Now, typically on average, I mentioned 50% participation rate, so they want to sell 500,000 of that. So they send an application on up to us, and we also underwrite it. So we will decision it whether it comes on our balance sheet or not. And there are times we say no. And I've called some of my bank partner CEOs and said, hey, I know it, but not this one, okay? It's just a little too far out there. But it's important to note we go through our own underwriting. We have our own set of credit analysts along with our bankers. We have our own decision tree with our various loan committees that go all the way up to the executive team and then all the way up to our industrial commission for decisioning. We take credit decisioning very, very important. It is not rubber stamping anything. We truly underwrite. Part of the unspoken benefit we also bring, I think that nobody really knew was going to happen 106 years ago, is our banks and credit unions learn from our underwriting and we learn from theirs. That sharing of knowledge and best practices and information, especially as the banking industry changes with loan origination systems, automated credit decision making, AI, everything else, that sharing of knowledge and relationships amongst the human beings involved in that is really, really powerful. And it's been really powerful for us, and it's going to be even more powerful given what's occurring in the industry that we're looking to face. So we'll decision it. We'll buy 500,000 of it, but we'll buy it at 6.25. We'll leave them a quarter, so they'll book it at 6.5, net 500 to them. We'll book it gross 500 to us at 6.25. So they get to make that 0.25% difference, and that's because they're leading and doing most of the work. And on the fee for that deal, say the fee on $1 million loan is a couple thousand, we'll typically give all that fee to them. We might pro rata some of it. A lot of it's just negotiation between us and them, but that's our standard deal. That's our typical deal. To administer and ultimately collect on that credit, the lead financial institution leads the way all the time. We never get in front of them, but we also do our own checking and tickler system and administration, and I think hopefully the bankers and the credit union members in the room know what I'm talking about. We will stay hooked with that administration through the loan, but we let that bank lead the way because they're closest to it. They know the customer the best. And what we try to do is advise and question, and we're basically just a second set of eyes. Because just like that lead bank or financial institution, our biggest job when we lend out money is to make sure it gets repaid, right? And so that's why that works that way. So if we have a disaster loan, same example, $1 million, market rate 6.5, but for some reason, the big disaster, we're gonna do disaster loan, we're gonna book that deal, say at 3.75%. That's way, way below market. What we'll offer to our financial institutions is, you can choose. Do you wanna hold 375 on your balance sheet when market rate's 6.5, or do you want us to buy the whole thing? Most of the time, they'll say buy the whole thing. Sometimes they don't. Sometimes they wanna hold it, maybe for a relationship piece, maybe for some other reason, strategic reason that they have, but we just have those conversations and that flexibility. But that loan will get booked at 375, well below market. Again, they'll underwrite it, approve it. We'll underwrite it, approve it. They'll lead the management through it. We'll stay hooked with them throughout. But the customer gets a 3.75% loan, and basically the bank and us on the back end, we figure it out. So the question becomes, who buys down the rate from 6.5 to 3.75? The short answer is, it just depends. It gets a little complex here, so I'm gonna try to simplify it. The simplest version is, we just hold it on our balance sheet at 3.75 and just eat it. And so be it. We'll just call it part of our mission, and that's fine. We'll do that. And we do that to a certain extent. However, we have options. And one of the options is, we can work with the legislature through that off-balance sheet, legislatively directed program, and they can buy part of the rate down by appropriating dollars or creating a revolving loan fund. So there are options there. There are also options on the off-balance sheet side that the Industrial Commission has certain powers and authorities that they can authorize different lines of credit to be put in place for various disaster programs. So it truly does depend. What happens is it becomes a conversation. So right now, today, we are working to stand up what will probably be our largest agricultural disaster program in our history, given what's occurred with our row crop farmers. So the compounded inflation that has not gone away, the high interest rates that are sluggish to come down, and soybeans and also commodity prices are hitting them for multiple years, right? That's the thing with farmers. They can withstand it for a year or two, but you get 3, 4, 5 years, pretty soon you're in dire straits in farming, right? So we are working on an agriculture disaster program to do some pretty large refis at below market rates, and currently the way we're doing it is we're working with our lead FIs for street knowledge and for input. We're working with legislative leadership and key legislators. We're working with a governor's office. We're working with the Industrial Commission. We're working with some local municipalities. We're working with FSA offices. We're working with everybody we possibly can. We're quarterbacking it, and we'll be delivering what I think will be our largest ag disaster loan program here coming up in January of this year. It's likely to be probably $350 million, $400 million in size, and our largest one historically has been about $190 million up to this point. None of this is grant money that we're building. It is not money that's forgivable. It's not money it is loans. So we will underwrite it. We will ensure repayment. We'll ensure proper collateral. We'll ensure proper guarantors, all the great things that we do. However, it'll likely be bought down to that 2% interest rate to help our farmers survive. And it'll probably have pretty flexible repayment terms. We'll put a lot of their losses and a lot of their working capital shortfalls against their real estate, kick it out as far as we can, give them payment relief, give them cheap interest. That's probably about as far as we can go, but that's likely what we'll do. So that's just a good example of how the process works and what we're likely to come up with. So all of that stuff, right? All of that mixed and matched stuff really has led to some key, I think, really important material, financial measurables that I'm proud of, the Bank of North Dakota is proud of, that I think the banking industry in North Dakota is proud of. I mentioned the $10 billion in combined capital flow out to North Dakota that otherwise probably wouldn't be there. $1 billion in student loans, approximately $400 million per year in total return back to the state. That's our profit. Now keep in mind, our net income, when our annual report's a couple $100 million on $10 billion, that's a 2% ROA, that's decent. But it's more than that because all the interest expense we pay on the deposits go back to our deposit holder, and that's the state, our ownership. So it's a combination of the two, so it's $400 million. We've done hundreds of millions in disaster programs. Our legislatively directed programs, those off-balance sheet where we get really creative and below market rates, those are about $1.2 billion. On our portfolio, us and our 91 financial institutions, we're renewing $2 billion plus, renewing and originating $2 billion worth of credit each year. So it's a big lift. That's a lot of debt. That's a lot of relationships. Our average deal size, you would think, oh boy, your average deal size is probably 50 million. It's not. Our average deal size is more like 5 million. So we do a lot of small deals, lots of small deals. Why? Because we have lots of small communities in the state, and most of our community banks are 500 million and under in size. We only have a few in North Dakota that are over $1 billion, and just a couple that are over like 4 or 5 billion. What about the big banks? Wells Fargo, B of A, and others. A couple things going on there. We used to have a lot of those in state, and then they did some regional re-strategizing. A lot of them pulled out of the upper Midwest a few years ago. Even when they were there, on the participation side, they don't use us, they don't need us, right? But there is still a partnership because Wells had branches in small communities. So disaster programs, Wells would work with us. B of A, US Bank would work with us. So kind of really just hit and miss with the big banks. Our main primary partners are truly the smaller credit unions, smaller community banks. That's our sweet spot. That's our primary. This one we're pretty proud of. North Dakota has the highest banks per capita in the nation. Now you would think, a lot of those are Midwest states. We should, because we're spread out geographically. You've got to keep branches. You got to keep banks. Yes, that's true. But we're beating South Dakota and Wyoming. Sorry, South Dakota. I know you're here, so yeah, it's good. You beat us in a lot of other things. So good. It's all fair. It's all good. It's all fair and lovely more, right? Bank services. Okay, I've got a little bit of time. Not on the lending side, not in our core verticals, but with those financial institutions, we are a correspondent bank. So we provide lots of different bank services. You can see them up there. Bond accounting, Fed line access, overnights, CDs, safekeeping, Fed funds, item processing, collateral evaluation. Okay, I'm not going to read the whole word cloud to you, but we do a lot with and for them. A lot of our smaller community banks don't have access to the Fed, so they access it through us. We access it. We provide that bridge. So lots there. We'll have a Q&A session. If you have any questions around that, you can ask me. I said I'd talk FinTech. Here's where I talk FinTech. And why I'm talking FinTech, one, I'm now going to transition and end here with where our strategic plan is at currently, because I've been giving you a lot of history. FinTech is a great example of the next thing in banking that we're planning to help with. Remember, our founding document said we're to aid, we're to cooperate with, and coordinate all parts, yes? When we look at what's going on in banking, we look at FinTech been a huge disruptor and evolving banking. It's growing tremendously, and it's growing because all of us want our banking services more and more right here. And we want it integrated, we want it fast, we want it frictionless, we want it cheap. And non-bank FinTechs are providing these services for customers way better than the banking industry is today. Banking's got to get on board and start moving in this way. We're leading our North Dakota banks on this path. We're doing it in two different ways. One, we're doing B3 Group. And B3 Group is for North Dakota banks and credit unions. We're going to be bringing in FinTechs from the nation, regulators, program managers, banks from the nation that are involved in some type of FinTech evolution, whether that's neobank and embedded banking or whether it's something in between. Our idea is serving our role as that middleman is to provide that environment for our North Dakota banks and unions to educate, communicate, connect, and join in new partnerships in the fintech space so that they can learn about what's going on in this industry and maybe get involved if it's strategically important to them. We're not selling them a single thing, but we're creating the environment for them to come in, kind of an incubator environment to learn and connect. The other, and maybe you heard the announcement, we're partnering with Fiserv, the nation's largest banking core provider, to develop Rough Rider coin. I have answered a lot of questions about this. And my first question is, why is the Bank of North Dakota in digital currency? And my answer is, we're not. What we're excited about, so what's going on out there with the passage of the Genius Act, if you got tremendous number of announcements coming like Circle, Tether, Wyoming Frontier Coin, all of those are going around the banking industry and working on end user merchant adoption. So point of sale, where you can swipe your debit card when you go to the bookstore or the gas station or whatnot, that's leaving banking kind of behind. Well, we're Bank of North Dakota, we're for banking. So we're excited to partner with Fiserv and build for banking the first new blockchain-enabled payment rail, specifically for community banking, that is a much newer payment rail. Banking was built on payment rails that were built in 1970, before the digital age. They're old, they're clunky, they're slow, they're expensive. Blockchain enablement coming into this space with some form of tokenization or stablecoin integration is going to be fast. It's going to be more decentralized. It's going to allow global instantaneous settlement of money, no more float. It's much, much cheaper, tenths of cents on the dollar. And you get currency on and off ramps, and you get 24/7, 365-day access. Our belief is that moving in the future, customers are going to want those value adds at some point. And if our community banks and credit unions aren't there to offer some of those value add products, like that deposit product that does something like that, they're going to go find it in a non-bank fintech. And all those deposits and all that interchange income is going to move out of banking. And banking survives on its deposits. They're the most important thing in banking. If banks don't have the deposits, they can't do any of the lending. So that's why we're involved in Rough Rider Coin. That's why we're involved in fintech and B3 Group and other things, is because we see it's hurting our community banks, and we want to help them compete better and be more relevant in an industry that's rapidly evolving, looking ahead. And so that's part of who we are. That's part of our mission. So I'm going to end, and then I promised myself I would leave 15 minutes for Q&A. I'm doing pretty good on that, I think. So next 10 minutes, this is our strategic plan at Bank of North Dakota. We just finalized it. I just ran the Industrial Commission through it. Just started talking with our legislative leadership about it. Just started circulating it with our North Dakota banking associations. And that's something I should mention as well. So we have the American Bankers Association. We've got Independent Community Banks of America. We have our North Dakota chapters of those. We work with those associations a lot. Disaster programs, on this fintech stuff we're working on. We work with those. They're very, very critical in what we do as well. So first and foremost, core values of Bank of North Dakota. We are North Dakota proud. We have a very passionate mission focus. We're always engaging in creative solutions, and we're there when needed with purpose and integrity. That's who we are. That's who we hire. That's who our staff is. I just gave this presentation of our new strategic plan to all my 200 staff. They were in an auditorium like this, and I asked them when I went through that, does that describe who we are? Every single one of them would nod in their head. Yes, that absolutely describes who we are. Being state government employees, we don't necessarily get paid as well as the private market. We don't get stock ownership possibilities that's allowed in the private market. We don't have some of these things. State benefits are great. My point is my staff, who are critically important, they're working for Bank of North Dakota because of the mission. They're not doing it for the money, because they honestly, every one of them could go make more money in the private market. So they're truly doing it for the mission, and that's just who we are. So I mentioned our mission is promote North Dakota agriculture, commerce, and industry, but here's a very, very important point, and I think as you continue to consider developing public banks, and I'll summarize at the end with my key recommendations, but one of them is make sure you hire the right CEO. Make sure. and make sure they're very clear on what a bank's mission ought to be. Because you hire somebody that's going to run and say it's all return for return's sake, and I want double-digit return and double-digit this and double-digit that, guess what? You're going to get in a pretty risky situation, okay? We are first and foremost risk managers in banking. The best banks are first and foremost risk managers. We borrow, private banks borrow the deposits of retail customers and business customers. The first and foremost duty is to protect those deposits and make sure they have access to them at all times, right? We at Bank of North Dakota, we borrow our state's deposits. Our first and foremost duty is to protect those deposits and make sure they have access to them and all the financial transactions work, which is why the second clarification of how we fulfill on our mission is liquidity management. It is why we only run a 70% loan to deposit ratio. Out of the $10 billion in assets, we only have $7 billion in loans. We hold $4 billion in nice, liquid, ready to liquefy securities when needed. The state of North Dakota has a history of sometimes needing that. When oil and natural gas are your biggest industry, it booms and busts. You can go back to 2014 and 2015 when oil prices went negative and they stayed there for a sustained period of time. We quietly sold $2 billion of our securities portfolio and injected that liquidity back into the state system to ensure all the financial transactions could continue on. And during that time, our legislature was coming in and having special sessions to find out where they were going to find more money, and there were budget holes and everything else. But we fulfilled on that part of our mission. It's why today we still want to fulfill on part of that mission. It's why we are going to continue to run with a 30, 40%. Now what that does is we make less money, right? So we're returning $400 million. That's me running at a 60, 70% loan to deposit ratio. I make less money on securities than I do on loans. If I'd run hotter on loans, I'd make more money. And I have some legislators that want me to do that. So why it's an imperfect science is I spend a lot of time educating our legislators on, I could do that, but you're not going to like the risk profile I have to take. And if oil goes down to 30 and stays there, and there's a lot of people that want it to happen, and you guys are having budget deficits, you're going to be glad I didn't. Because I'm going to be the one providing liquidity that you can use. So it's very, very important that a public bank be very clear on its mission, because it will get pressure, lots and lots of pressure. So you got to have a strong CEO, you got to have strong board members, and a strong executive team that know banking. That's why one of my key takeaways at the end of this is going to be hire a banker to run your bank. Very critically important, very, very critically important, to understand some of these concepts and manage through them. Then after we're risk managers and liquidity providers, then we are growth catalysts, and that's where we play that middleman, and we work and we facilitate and we win the day on Agristo, that huge potato processing plant in Grand Forks we're really excited about, and then we generate a total return. It's in that order, 1 through 4. So if it's a question between maintaining liquidity or return, we will maintain liquidity. Here's our core target in 10 years. We want to grow to be $14 billion in assets. We want to have $3 billion in fintech funding. We want to have stable, increasing total returns. And we, at the end of the day, want to be North Dakota's bank, meeting North Dakota's needs. Our core markets, our target markets, on the left, moving over, will always be our financial institutions. Always, always, always. I've had questions from my banks. Okay, as you lean into fintech and as you develop Rough Rider Coin and as you do B3 Group, are we as important to you moving forward as we have been historically? The answer is absolutely yes. You're more important to me than ever. We're not moving away, we're moving with and towards you. I've answered that question. It would be outside of our mission to do nothing now. If we recognize the industry's changing and we've all got to evolve in this space in order to stay relevant, it would be outside of our mission to do nothing. And I've equated it to this as well. Think back to 1990 when the internet was developed. How relevant would banking be today if at that time we would have said as bankers, we would have said, we're not going to do online banking websites. Nope, too risky. Nope, we don't understand it. Just think if your bank didn't offer you online or mobile banking today, how relevant would they be for you? Not very relevant. This is that next evolution. This is what fintech's doing. This is what AI is doing. This is where it's going. 10 years from now, banking's going to look a lot different. And we think it's going to be this beautiful merger between fintech and banking that it continues to happen. It's just that we as banks, we need to get in this game and get moving because it's where our customers are going. So they are going to remain our top key market. Right with that are our state agencies, our state stakeholders. I've talked through them quite a bit. Our new ones are in the digital bank space for Bank of North Dakota and also in the embedded banking space for Bank of North Dakota. We've got a couple new national markets that we might be interested in for the benefit of the state. Our three uniques are we're incredibly mission-driven. We truly, truly are. We have a stable legacy. And the last one is first responders, always being there for a disaster. That's truly what makes us unique, very, very unique. Here's our magic sauce, back to the gears where we play that middleman. That Agristo example, the potato example, we identify the need, we ideate, but the biggest thing is we can initiate the whole strength of state. And there truly is not another entity in North Dakota that can do that. Commerce can't get that done. Water can't get that done. We can. That's really our magic sauce, is when we can pull it all together and quarterback the whole thing. That creates a huge win for the state of North Dakota. Our 4-year picture, as we move forward in a volatile environment, first and foremost, we're going to continue to engage in strong banking principles, strong underwriting, strong balance sheet management, strong risk management. That is number one strategy for us because the times are volatile. They have been incredibly volatile since 2020. It's like a new era that we're in, right? The next unprecedented thing. They're making up names for storms. So we've got to be that rock. We and our industry has to be that rock in the river that as it floods and roars around us, that we stay steady. Always the adults in the room. That's our plan to do that. Stronger than ever relationships, talent management culture, because even with AI and digitization and remote work, the more you bring that in, the more you've got to offset that with more and more human being work, good human being work. So we're working on that. Fintech I've talked about. At the end of the day, for us, mission, mission, mission. We measure every decision we make at the end of the day against, does it fulfill on our mission or it doesn't? If it does, we do it. If it doesn't, we either don't do it or we really try to argue our legislators not to force us to do it. So. All right, I'm going to end here, and I'm going to hit my timing. I'm so happy with that. So just my reflections overall through all that complexity of being a public bank, what works and what doesn't. And what really works, number one, and you probably heard in my presentation, is a partnership with our financial institutions. Without them, we don't exist. We would not be here. I would not speaking to you today. So that partnership has to be there. The Industrial Commission as a board of directors, if I had to have my legislature as my board with decisioning and operational and strategic, we would not be here. That would be my guess. I would not be speaking to you because you need that board of directors for that independent oversight, but you need something that's much more nimble than a legislative body, and nothing against a legislative body. There is a very valid purpose for them. I tell my daughter who asked me, "Well, it doesn't sound like a good system." I said, "It may not be perfect, honey, but I challenge you to find a better one in the world." So it has a place. What it does not have a place doing is running a for-profit private entity that is owned by the state. You've got to have that governance framework in place to allow that entity to operate. Third is CEO history. I'm the 15th. There's been 14 before me. North Dakota's been very blessed and just smart and brilliant. I tell my staff, we're standing on the backs of giants. We truly are, because North Dakota has hired CEOs that were bankers and allowed them to bank for the most part. And that's been very critical to our success. We've had Senator John Hoven was CEO and president of Bank of North Dakota before he became senator. Eric Hardmeyer, Todd Steinwand. You go back to the Stenjum family, who is a major family in North Dakota, both politically and in the energy industry and in the banking industry. There has been CEO and president of Bank of North Dakota. So tremendous history of hiring a person and allowing them to do their job and run it as a for-profit business. We've never competed with our partner FIs. We never will as long as I'm CEO. That's absolutely critical. That works. Our mission-based activities and that real magic sauce where we're that quarterback, that really works. Here's what doesn't. We have some strategic speed to action. So what I walked you through with Fintech, I swear I've lit every legislator's hair on fire, absolutely, with what we're doing. That's because I'm coming in from the private market saying, we need to move on this, we need to move. And so they're saying, slow down, slow down. But we're meeting in the middle. And it's not necessarily it's not working, it's just it's hard to run a private business at the state speed. And there's just that challenge, and there's probably always going to be that challenge. We are viewed operationally more as a state agency, kind of by the state insiders, and we're really not a state agency. We don't spend $1 of appropriation. It's weird, we're in the appropriation process still, but it's really, we don't spend $1. We borrow the deposits, we earn our revenue, we pay our operating costs, and then we put back into the general fund our net profit through dividends, but we don't spend anything out of the general fund, and yet we're still getting appropriated dollars out of the legislature, but they're not really appropriated dollars. So there's some of that, and there's also a little bit of state bureaucracy that we have to deal with that kind of gets in the way of operationally running a $10 billion like a private bank. But there's issues with every company, right? There's issues in every industry. None of them are not overcomable. They're just part of it. Legislative appropriate misconceptions and understanding. The captive deposit base. It is both a blessing and a curse. How is it a blessing? We don't have to go out and compete for deposits. Therefore, we can run at an efficiency ratio that's in the high teens. Now keep in mind, most banks out there have to run 60, 70% efficiency ratios, or at least 50% efficiency ratios in order, because they've got to build a huge mechanism to go fight for market deposits. That's a lot of people, that's a lot of branches, that's a lot of fintech, that's a lot of digital, that's a lot of marketing, a lot of stuff. We don't have to do all that, so we can be much more efficient. The curse is, knowing our state anyway, we can go from a surplus to a deficit pretty fast just based on oil prices and commodity prices. That's why we've got to make sure we're always looking out and managing the bank and keeping liquidity top of mind. So that's what I have. I want to thank you so much. Hopefully this helped. Hopefully this was informational for you. I'm here on a couple more panels, and I think we have time till 11:45 for questions. Happy to answer any questions, or catch me afterwards. Thank you.